TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials right now down 8. You got the NASDAQ off 7. S&Ps are down 2. Gold contracts trading up $3.20 at $1,229 an ounce. We have silver up 2 cents, down 2 cents rather, at $16.15 an ounce. Platinum is down $7 at $9.83 an ounce. We got copper down 3 pennies at $2.14 a pound. Light sweet crude's getting hit. That's down $1.28, $40.23. The notes, you have the notes up 4 ticks, 130.16. The bonds up 23 ticks, 166.01. King dollar down 209 ticks at 894.69. The euro is up 33 at 113, and the yen's trading at 108.85. Now we go over into the cash S&P. What do you have? Okay, so we've been dealing with this ABC structure on the way up. It hit the number. The number was 2087.50. Yesterday, what do? You hit 2087.84. So the bottom line is that the end of the run? You know, we'll find out. We'll find out pretty quickly. This is option expiration out here today, and what you can expect on option expiration is that we're going to have high volume. The real question is, do you have high volume and you go south simultaneously? I don't see that happening. I see the world markets last night, they basically went sideways. The world markets are waiting to see what ends up happening with this oil producers meeting that is taking place this coming Sunday. Bottom line is that that's going to move markets. If we go over and we take a look at the oil market right now, oil didn't get to its higher swing point. The highest swing point that we were talking about was $42.49. We hit $42.42 on Wednesday. We're coming down right now with 190,000 contracts. It looks to me that by the end of today, what you're going to do, it's pressing down. It's pressing down with volume. So oil's going to run back first into this $40 area, which is going to put more selling pressure inside the S&Ps. We go over to the bond market. What do we have with bonds? Okay, so bonds out here have failed to hold its March high. The March downdraft, rather. The March downdraft in bonds, 130.27. We've come down twice this week with big volume. That's saying that bonds want to run down to lower price. This morning, you're bouncing, and we're bouncing, let's see, we're at 431,000 contracts right now. That would be bouncing on lighter volume. We won't be doing 1 million contracts, and that's how we came down with 2 separate times. We go back and we take a look at the gold contract. What do we have with gold? Gold come down yesterday with volume. And what you have out here today for Friday, this is pretty cool, folks, okay, if you happen to be in the metals market. Bottom line, yesterday you had the wide price spread. You had the accelerated volume, went from 1245 to 1225. You did 200,000 contracts. Today, you're down to the 1226, and they haven't been able to croak it and get it to a lower price. That's a big deal inside the gold market. That is saying that King Dollar is going to continue to go lower. That is saying that the metal market still wants higher price. King Dollar out here today is down 203 ticks. Volume's not huge out here today on the way down. I suspect what you're going to see, King Dollar is going to make its way on a longer basis down to this 92.50 area. We go over the NDX 100. We go back to the NDX 100. What do you have with the NDX 100? NDX 100 right now, if we take a look at the 3 Qs, are down 16 cents. I suspect what you're going to see out here in the markets today is that you're going to see the S&Ps, the small caps, the NASDAQ 100, all slightly lower. This market is waiting to see exactly what happens this coming Sunday. The S&P did the ABC structure on the way up, so the bottom line, the risk right now is that this market wants to go down versus going up. And bottom line, I shook off my bear suit, and that suit just got put on. This 10 a.m. update is brought to you each and every day by EverBank. For more information on the products they offer, you can give them a call at 855-750-4051 or visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking to you right back here, 10 o'clock Monday morning.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.